Hello, ladies and gentlemen, Greg Michalowski from ForexLive.com. This is going to be a Forex quick look at the euro versus US dollars. We head into the new trading day, August 10th, and also look toward the CPI data to be released tomorrow at 8:30 a.m. in the US. When you have a key release and the number is uncertain, you can always go higher or lower. It's really up to the number, really, isn't it? And that could be off by 0.11%. And it causes a huge move either to the upside or downside in the US dollar. So we have to define where we're at. We also have to define things like targets, bias levels, risk levels, so on and so forth, so that you can be aware and prepared, is what I like to say, and then look to potentially react, and it might be even after the release. So let's take a look at the euro versus US dollar, and I'll explain what I'm talking about. And if we look at the hourly chart here, what do you notice? Well, the thing I notice is you see how this blue and green line are converging? That's the 100 and 200 hour moving average, and they're pretty much near, on top of each other at the moment. And in trading here yesterday, the price moved above and below those moving averages, indicative of a market that is waiting. It's waiting for the US CPI data to come out, and then it's going to react. So buyers and sellers are battling it out. They're fighting, and they're fighting around the 100 and 200 hour moving averages. Now, if the data should come out stronger than expectations, what would you expect? I would expect that the US dollar to get stronger. How does that manifest in the euro versus US dollar? The euro versus US dollar goes lower. And on the downside, what we would look for? Well, we have some key target levels on the downside that I would look to target, in particular this swing area right through here between 1.09329, 1.09421. And to understand you can look at different swing highs and lows through here. Admittedly, it got messy here, but the last thing the market did was find support against it and move higher. And in trading, not yesterday, but the day before, the price came down to that level, fell a little bit below that, and rebounded back to the upside. Now, if you go back in time, this is that area right through here, and follow that area, this line right through here, this yellow area, and you can see that this goes back way back here where the market had ceiling, and then it moved above it and became a floor. And it wasn't until last week where the price came back down to that area, and then we had this messy period, and you can see how the price found support and trading on Friday, and again in trading on Tuesday. That is going to be a key level. And just below that is the 100-day moving average. That's this blue overlaid line. And the importance of that, you can see clearly right here, back on this day right here, the market came down to the level of bounce. On this day right here, we actually fell below the level, not once, but twice, for a couple hourly bars there, as a matter of fact. And each time the price fell below that level, I think it got 5 pips below that level and bounced back. I think this is like 1 or 2 pips below and bounced back. So you can characterize support against that 100-day moving average, even though it fell below that level. And trading on Tuesday, the market once again came down to that 100-hour moving average. And what did? We found early buyers against it this time, and the market rotated back to the upside, up to the 100 and 200-hour moving averages. Now, if I were to go to the daily chart, this is in the month of August that these lows are made. And if I go to the daily chart and look at the lows in the month of July, this low right here, where did it find support? Against the 100-day moving average. Where did the market find support? Here, early against the 100-day moving average. So you have to go all the way back to this period right here, which is June 14th, the last time the price really traded with any sort of significance below the 100-day moving average. That's key. And that's going to be a key level going into the CPI data tomorrow. As the price moves below the 100-day moving average, guess what? This technical bias, buying against the 100-day moving average, flips over and becomes a selling bias instead. So be aware of that level. Be aware that 100-day moving average is going to be key in the new trading day. Now, on the top side, what happens if the CPI data comes out weaker? And I have a red line here, which corresponds with these highs right through here. Now, this is the hourly chart, but you can see 1, 2, 3, 4, 5 different times the hourly bar went up to this level at 110.10. And what do? We found sellers against that level. So that's going to be a level that if we get above, if we get to and through, it would open up the door to the upside. And you can go back in time and look at these different highs. This high right here, this high right here, this low right here, these highs right here. There's some levels through here where the market used that 1010 level as a support or resistance level. So that's going to be a key level that if we get above it, it's going to be increase the bullish bias. Finally, the next key target area is this yellow area and this 38.2% retracement. This yellow area corresponds with different highs. Actually, it corresponds with the these highs right here. The 38.2% is the other key level. But look at 1, 2, 3, 4, 5 different highs that came between the 110.41 and 110.502. Actually, it's 38.2% retracement. It comes in 110.502. All these highs came in short of the 38.2% retracement of this trend move to the downside. Now, in a trend type move like we see here, left to right to the downside, the buyers need to prove that they can take the price above the 38.2% retracement. If they can't get above the 38.2% retracement, guess what? The buyers aren't winning. The sellers are still winning. So this is the sellers winning. This, actually that wasn't a 38.2, but this area right here is the sellers winning. This is really the sellers winning. So if the price were to go up to that level and find sellers against that level, yeah, we're higher on the day, but we need to get above that 38.2% retracement, as importantly as we need to get below the 100-day moving average on the downside for the sellers. So for the buyers, you need to get above 1.1010 and the 38.2 at 1.10502. If you're able to do that, you're going to get more bullish bias. So that's how I see the euro versus US dollar. Right here, what is the market saying? It's saying, we don't know what's going to go on. We're going to wait for the CPI data and make our decision of what we're going to do, either go to the upside or the downside. And that's what that's what traders are doing right now. And we'll see. The gamblers are out there sitting there flipping a coin and saying, I like it or I don't like it. But the traders are focused on the risk levels and the bias defining levels and saying, wait for the number to come out and then I'll react. We'll see what happens then. My name is Greg Minkowski. Good fortune with your trading. Bye-bye now.